Welcome back to Market Brief After Hours. We've got a fascinating mix of market moves to unpack today. The big headline is the Dow finishing more than 250 points higher, largely thanks to a major slide in oil prices. But underneath the surface, there's some real drama playing out in the tech and semiconductor space. Let's dive right in.
Absolutely. It was a day of stark contrasts. On one hand, you had easing geopolitical tensions in the Middle East providing a massive sigh of relief for energy costs, which lifted broader equities. On the other hand, we saw some serious reshuffling in tech, particularly around artificial intelligence and chip makers, as investors try to figure out where the next leg of growth is coming from.
Let's start with the hard numbers for the major U.S. indices. How did they wrap up the session?
The Dow Jones Industrial Average led the way, rising 263 points, or 0.51%, to close at 52,210. Meanwhile, the S&P 500 was virtually flat, adding just 0.02% to settle at 7413. And the Nasdaq Composite actually slipped into negative territory, losing 0.18% to end at 24,932.
That divergence between the Dow and the Nasdaq is really telling. It sounds like the drop in oil played a huge role in supporting those traditional value sectors. What exactly happened with crude today?
Oil took a massive hit. Brent crude futures for September delivery plunged 8.7% to settle at $88.36 a barrel, dropping well below that key $90 threshold. U.S. West Texas Intermediate, or WTI, wasn't far behind, sliding 7.5% to $82.61. The catalyst was reports that Iran would suspend attacks as long as a U.S. pause in hostilities remains in place, which instantly eased concerns over what had been 2 weeks of escalating conflict.
That is a massive sigh of relief for global markets. What prompted Washington to pause its campaign?
Advisors reportedly warned that the military was running out of viable targets and raised concerns about depleting U.S. weapon stockpiles. On top of that, U.S. natural gas futures slid about 4% to an 11-week low of $2.77 per million British thermal units. That's driven by record output and ample storage.
A very welcome breather for inflation worries. And we saw U.S. Treasury yields react to this as well, right?
Exactly. With energy prices sliding, Treasury yields fell across the board. The yield on the key 10-year Treasury note, the main benchmark for mortgages and consumer debt, dropped 3 basis points to 4.649%. Shorter-term yields also moved lower. The 2-year Treasury yield, which closely tracks Federal Reserve interest rate decisions, dropped about 1 basis point to 4.32%. Meanwhile, the 30-year yield fell nearly 3 basis points to 5.133%.
But that support didn't quite save the tech sector today. Semiconductors, in particular, had a rough ride. Why all the pressure there?
It's a combination of geopolitical tech rivalry and some air coming out of the AI bubble. Early in the day, there was a lot of excitement around the blockbuster IPO of Chinese memory chip maker CXMT in Shanghai. Its shares soared nearly 500% on day one. But that actually highlighted the intense competition and tight product markets Chinese companies are creating. Then a report from The Information dropped, stating that China has begun developing its own deep ultraviolet, or DUV, lithography machines.
Ah, the machines used to build the chips themselves. That's a direct challenge to the established players.
Precisely. ASML, which dominates that lithography space, saw its U.S.-listed shares tumble almost 6%. Other chip giants like AMD and Teradyne fell 5% and 4% respectively, and Micron shed about 2%. On top of that, investors are actively rotating capital. There's a growing sense that the AI infrastructure trade is getting a bit crowded, and with stocks off their June highs, people are looking to reposition.
And some of that money actually rotated into crypto-related stocks, which had a stellar day.
They did. While chip and AI infrastructure stocks were bleeding, crypto stocks surged. Bitmine immersion jumped 13%, MicroStrategy gained 7%, and Coinbase rose 6%. However, AI-exposed Bitcoin miners like Cipher Mining and Hut 8 actually fell because they are tied to that same chip and infrastructure pressure. Meanwhile, Bitcoin itself is holding steady around $65,000. It's technically undervalued according to its historical MVRV Z-score of 0.42, but there's no major panic selling right now. It looks more like a healthy market reset.
And we can't forget El Salvador's ongoing Bitcoin experiment, which is heading into a major political test with the upcoming presidential election. Their holdings are now up to over 7,725 Bitcoins.
Yes, they're quietly adding 1 Bitcoin a day, but the political debate is definitely heating up over there as the opposition lines up challengers. It'll be a space to watch.
Fascinating dynamics. We need to take a quick break, but when we return, we'll look at how international markets fared, dive into the latest Forex and commodity trends, and highlight some of the day's biggest individual stock movers. Stay with us. Welcome back to Market Brief After Hours. Let's shift our focus globally. Europe and Asia also had some busy sessions today. What were the highlights across the Atlantic?
European stocks had a strong showing, with several markets hitting multi-week highs. The Pan-European Stoxx 600 edged up 0.02%, but individual countries saw much stronger gains. The UK's FTSE 100 rose 0.42%, France's CAC 40 added 0.4%, Switzerland's SMI jumped 0.66%, and Germany's DAX led the major indices with a 1.04% gain.
Germany's DAX up over 1% is impressive. Was there some positive data supporting that?
Yes, the German Ifo Business Climate Index rose to 86.6 in July, beating expectations of 86. It's the third straight monthly increase, signaling a gradual stabilization, though business expectations improved significantly to 86.7. Over in the UK, retailers reported a slower decline in sales for July, with the retail sales balance rising to -26% from -54% in June.
And what about Asia? It sounds like the CXMT IPO we mentioned earlier really electrified the Chinese markets.
Absolutely. China's Shanghai Composite surged 1.15% to close at 3,858, fueled by CXMT's massive debut. Hong Kong's Hang Seng Index also jumped 0.98%. In Japan, the Nikkei ended 0.5% higher at 64,931, while the broader Topix Index climbed 1.37%. South Korea's KOSPI surged 0.97%, led by tech. Samsung Electronics gained 1.8% after partnering with Broadcom, and SK Hynix rose 3.2% in local trading. Down under, Australia's S&P ASX 200 jumped 1.39% on strong services sector growth, and New Zealand's benchmark index rose 0.57%.
Let's transition to the foreign exchange market. We have some detailed technical data here, including moving averages. How is the Euro-USD pair shaping up?
The Euro-USD pair is still under significant bearish pressure, closing virtually flat at 1.1370. It's trading well below its key moving averages, which are all sloping downward. The 50-day simple moving average is at 1.1493, the 100-day is at 1.1570, and the 200-day is way up at 1.1632. Having lost the 1.1400 support level, the path of least resistance remains down unless it can break back above 1.1418.
And what about the British pound? Did it fare any better against the dollar?
Not really. GBP USD retreated, closing down 0.24% at 1.3292 after failing to hold above its 50-day moving average of 1.3366. It also remains below its converged 100-day and 200-day moving averages at 1.3398. This rejection near 1.3400 keeps the near-term bias to the downside, with support sitting at 1.3284.
On the flip side, the US dollar seems to be flexing its muscles against the Swiss franc.
Definitely. USD CHF extended its bullish run, closing up 0.16% at 0.8190, very close to its session high. This pair is trading significantly above all its major moving averages. The 50-day is at 0.08009, the 100-day is at 0.7937, and the 200-day is at 0.7920. It's a robust uptrend with no signs of reversing yet.
Interesting. And what about the cross-currency play, Euro-GBP?
We saw a sharp counter-trend recovery there. Euro-GBP closed up 0.27% at 0.8554. Even though it's bouncing from recent lows near 0.8460, it's still below its major moving averages. The 50-day is at 0.8596, the 100-day is at 0.8633, and the 200-day is at 0.8680. So while buyers are pushing back, the broader trend is still downward.
Let's look at precious metals. Gold and silver have been consolidating. What do the charts tell us?
Gold managed a 0.75% gain to close at $4,083, but it's still stuck in a lateral basing pattern. It's trading way below its key moving averages. The 50-day is at 4,238, the 100-day is at 4,494, and the 200-day is at 4,482. Silver is in a similar boat. It closed up 0.62% at $58.54, but left a long upper wick after failing to break the $60 psychological resistance. Its 50-day SMA is up at $65.67, with the 100-day and 200-day SMAs around $71.38 and $70. Both metals are trying to build bases, but the medium-term trend remains heavily bearish.
Let's wrap up with some of the individual stock stories that caught everyone's attention today. There were some massive percentage moves.
Oh, absolutely. Forte Biosciences was the star of the day, closing up over 39% after Argenx SE agreed to acquire the company for about $2.2 billion, which works out to $77 a share. Another big winner was D-Wave Quantum, jumping more than 20% after Benchmark Company reinstated coverage with a buy rating and a $30 price target.
On the flip side, we had a massive biotech crash.
Yes, MapLight Therapeutics plummeted more than 71% after mid-stage trial results for its experimental schizophrenia drug failed to meet upside case expectations.
Ouch, that's a brutal drop. And we also saw some collateral damage from the oil plunge we talked about earlier.
Right. Energy producers and service providers took a beating. Devon Energy, Diamondback Energy, and Occidental Petroleum all closed down more than 4%. And in chipland, while CXMT's massive debut in Shanghai was a headline, other memory chip stocks struggled globally. SanDisk's parent slid 11%, and SK Hynix's global listers dropped over 7%.
Quite a dramatic day of rotations, geopolitical shifts, and corporate shakeups. It sets up an incredibly interesting week, especially with the Fed's interest rate decision coming up on Wednesday.
Absolutely. The consensus is pointing toward a September hike, but with the CME Fed Watch tool pricing in a real possibility of a quarter-point hike this week, volatility is definitely on the menu.
We'll be watching it closely. That's all for today's episode. If you find this useful, please follow Market Brief After Hours. Thank you for listening, and we'll see you next time.